Hey everybody, it's Pete. Good morning. Welcome to today's episode of Stocks for Breakfast. Hope everybody's having an awesome day so far. I know it's early. It's about 7:30 in the morning. Today we're going to talk about which stocks to be picking today, which stocks to be buying, which stocks to be avoiding. But more importantly, we're going to be talking about long-term trading success. I really have had a lot of comments, both here on YouTube, in our private Facebook group, as well as in our private community, about the current market conditions, which have definitely changed. And that's not a bad thing. It's just that now we're kind of getting back to normal. If you've been a regular viewer of our channel, and hopefully you are, click that subscribe button. I'd really appreciate it. You also get alerts too. You know that we've been talking about this for a while. We've actually kind of highlighted the dramatic move to the upside that the market has seen since March of 2020. And I wouldn't say much I was warning everybody as much as just telling everybody that this is abnormal. Take advantage of the glorious stock market that we were in, but continue to improve your process every day of how you determine something is a great idea or not. So what we're going to do today is we're going to have a little bit of a discussion around stock picking, sector rotation. We got some really good questions in our community in regards to sector rotation recently, and it really comes down to a lot of people are I don't want to say panicking. That's not the right word, but I think that they've lost context a little bit. I forgot who had mentioned it yesterday. It might have been Joe in our community yesterday, where he was watching CNBC or Bloomberg or something along those lines, and they were talking about interest rates changing and going up like a half a point up to whatever it was, like 3% or something like that, or two and something. This has been an amazing period to be involved in the stock market. Absolutely amazing. But you know what's going to happen now? We're going to start getting back to normal. We're going to start getting back to the pandemic. Oh, it's Guy. Okay. Thank you, Guy. Appreciate that. So we are now in a market where we're going to have a lot more back and forth, and I want you to write this down because this is actually important. We're going to start actually trading on earnings. We're actually going to start trading on what's going on with the company, as opposed to the intervention where stocks are being supported, for lack of a better way of putting it. And we're going to have a lot more back and forth in the market. We're going to have a lot more where it's easier to read price action because you're seeing 2 or 3, 5 days to the upside, 2 days, 3 days to the downside, and back and forth. The market that we had yesterday was a little bit, it's still reacting to what happened with the Fed last week and the Fed announcement. Look, does anybody on this call right now, is it surprising anybody that they're talking about interest rates? Is it surprising anybody that quantitative easing is easing? It can't be surprising anybody. We've been talking about it since 2 years ago. It's here. But the question is now, what do you do? The question is, how do you elevate your game and make money even in this current market condition? How do you net profits from the stock market? How do you make the stock market make you money as conditions change? That's really what's going to come down to right now. And if you've taken advantage of the stock market over the last 18 months, congratulations. You should have, quite honestly, because we've basically been vertical. But what's going to happen now, and I'm going to touch on something that we mentioned yesterday, is now you're going to find out what you're made of. Now you're going to find out how bad you actually want to make the stock market make you money. Now you're going to find out if you get hit and a stock goes a little bit lower than you expected, how do you react and how do you plan for that? I will tell you straight up, in order to be massively successful at anything, including trading stocks or entrepreneurship, which, by the way, I just want to touch on entrepreneurship just for 1 second. Our community, both here on social media, but especially in our bootcamp and mastery program, is filled with people that are self-employed, people that are entrepreneurs, people that are business owners. And those are really the kind of people that really understand that it's a process to be successful. So for those of you that are still learning how to engage in a uncertain environment. Now, again, you go to work, you work your 9 to 5, you get a paycheck for your time at the end of every month or every 2 weeks, however often you get paid. You have your 401k and you have that blanket of security. And that's perfect, right? For a lot of people, that's actually what is the dream, right? The dream is you get paid, and you retire, and you have some other 401k or pension or whatever you have available in your company. And that security is good. But you're not on this call right now at 7:30 in the morning, which, by the way, thank you. You're not on this call at 7:30 in the morning because you want to take the easy way out. If you wanted to take the easy way out, you'd be sleeping right now, or you'd be at the bagel place having bagels and coffee, and you wouldn't be watching this right now. So I'm going to make an assumption that you don't want the ordinary. I'm going to make an assumption that you want more. I'm going to make an assumption that you are one of those people that is never going to be satisfied with just doing okay. You want the unlimited upside, and you want to be in control of that unlimited upside. But we got to talk about the other side. You know, you can see in the background, I have Think and Grow Rich and all the other educational books like that, and personal development, and Anthony Robbins and everything like that. With, I'm going to sound like Spider-Man at this point, with unlimited upside comes responsibility. And part of that responsibility of earning unlimited upside is handling adversity. And you can call the current market conditions adversity, or you can call the current market conditions an opportunity to raise your game. So I'm going to personally challenge you. You're spending this time with me every day. And again, I'm so grateful that you do. I'm going to challenge you to get back up when you get knocked down. I'm going to, like somebody posted in yesterday, in the comments yesterday about trading AFRM, and the stock went up and pulled back really hard and didn't expect it and that kind of stuff. It's during those moments when you get knocked around that you really find out what you're made of. And I'm going to challenge you to be more than you ever thought possible, but you have to make a choice that every single bit of adversity that you have, which there will be if we're going after the golden ring and having that asset that we are the reason we make money, if you're going to have that unlimited upside, you're going to get knocked around a little bit sometimes. Stuff is going to happen that you don't expect. You're going to have to show yourself, not me. I mean, look, if you want to lean on me, I'm fine with that. I don't mind being a role model. If you are going to get knocked around, you have to have a process in place that says, I don't care how hard it gets. I'm going to be tougher. And especially now with the market reversing, there's a lot of people who, again, took advantage, as I hope you did, when the market was basically going vertical. You don't have the context yet of what it's like to trade when the market's going back and forth, and you need the structure. You need to have an edge. You need to know how to adjust from one sector to another, which is what we're going to talk about today. How to find the right stocks, how to be in cash. So I just want to walk you through. I just want to show you an email that we sent out this morning, because it focuses on how professional traders right now, which I hope that you aspire to be, how professional traders right now adjust to what's going on now. Okay. And I'm just going to pull this up on the screen. This is an email that we sent out this morning, and I'm going to zoom in on it a little bit. Okay. The recent decline in the markets is all about the reality of last week, which centers around the Fed. So you can't ignore all of the stuff that we just talked about, what's going on with the Fed, right? So that's all great, right? Everybody knows all of that kind of stuff. Everybody's aware that all of this stuff is going on, right? But what does it mean? How do we react as traders, right? Well, what does that mean? All right. It means we adjust too. Now, I just want to come back. I'm going to finish reading it. No, you know what? I'm going to come back on the screen. If you remember what we talked about yesterday, we spent a lot of time yesterday talking about paying attention to price action and learning how to read the order flow, learning how to read the tape. But if you bring to the forefront what exactly that means, it means that we need to pay attention to, if smart money is starting to buy or sell a stock, we need to pay attention to how recent they've been doing that and to what degree. So in other words, did they just start buying yesterday after a stock was in a nice long downtrend, or have they been doing it for a few weeks, a few months? You got to make that determination. But again, getting back to what we have in the email, why? How do we adjust to that? Well, we need to pay attention. If a stock has been going down for months, let's take Lucid, for example, which had earnings, right? Going down for months, and all of a sudden we start to see spikes in volume, larger green candles, but it's over 2 or 3 days. Okay, the smart money just started to adjust their positions from exiting a bearish order flow and starting a new bullish order flow. That means that if we pay attention and say they just started, Well, that means we should just start. It doesn't mean we should get in there and start loading up and as much buying power as we can have to put into that trade, because that's just not smart trading. If the smart money, the deep pockets, the people with all of those research staff just started to build that position, we should be mimicking the smart money that can move the market and make stocks go up or down by starting out with our first position. Now, whether it's just a new reversal from a downtrend to an uptrend, or the first piece that we put on in a new trade, specifically a swing trade, work that position. It's just not smart, especially if the market conditions are not perfect. It's not smart to go in with full share size unless you built such a great argument that the sector is up, the market is up, the volume is up, we're breaking out to new levels, other stocks in that industry group are all strong, and there's room to go. Only in those conditions would you start to build a better argument for more share size. So remember, we talk about it a lot. Reading the tape and reading the price action comes down to, when do I want to get my full share size, sooner or later? And that comes down to the argument that you build. That comes down to adjusting. So if we get back into this email, what do? It means that we adjust to as the market and the conditions are changing. So I'm going to ask you right now, have you started to mentally adjust to the market conditions changing, or are you just pulling up scanners at the end of the day and saying, okay, just tell me what stock had the most volume yesterday or was up yesterday, and I'm going to trade that? The market is not what it was even 2 months ago. So that means we here on social media, we in our private community inside the boot camp are adjusting our activity level. We're adjusting our position sizing. So what does that mean? We become focused much more on initial position size, demanding proof of follow through. Remember yesterday we said use the word follow through. Don't necessarily use made money or lose money, because if we do our job putting on a trade, did it follow through? Great. If it didn't follow through, all right, we'll manage that position. Demanding proof of follow through. So we want feedback from the market before we work our way up to a full position size. It means we begin looking for a hedge, something we have not talked about in a long, long time. I can't tell you the amount of questions we got from here, both on social media as well as in our private community. Pete, why aren't we calling any short sales out? Well, the SPY made something like 54 new all-time highs in 2021, heading up into September, maybe even including September. If the market keeps printing new all-time highs every day, why in the world would we start looking at short sale opportunities when the easy money, the easy trades are to the upside, which is what we're going to talk about now in a couple of seconds. We're going to dive a little bit deeper into sector rotation. We're going to talk about some of the core principles found in this book right here, which I'm sure everybody has read at some point. It's about growth investing, Investors Business Daily. There's a big conversation in there about part of CanSlim is the market. It's institutional support. It's reading sector rotation. So again, taking this over a little bit, we're going to start looking for a hedge. And what does that mean? It means that we could be looking at options as a hedge. It means that if we're buying positions, they move in our favor. Maybe we buy some puts as downside protection. It means that maybe we even go a little bit further and we start to look at short sale positions. And if you don't understand short selling, we have a video here that you can take a look at that as well. It means we exercise patience. I can't express this strongly enough. One of the things that I am the most proud of with our community, especially our community, our active trading community on the bootcamp side, where we're both day trading and swing trading, the level of professionalism that we are seeing inside of our bootcamp community, people like John Bates here, and Winnie, who are on the other side of our community. All right. These are people that are buying into this is the long game. We're playing the long game. We're not just looking for profits by the hour. We're looking for profits by the month and the quarter and the year. So again, going this a little bit further, waiting, having patience. We don't force trade because we're bored. I'm going to tell you just straight up right now, I'm doing this a long time. If you don't know, I had an office in New York City. I had a trading firm. We had 300 traders. I've literally been teaching thousands of traders. People were trading my capital. The single biggest reason people lose money, people who are smart, probably somebody like you, and you want to take this one to the bank. I don't make a lot of promises. I can tell you this from experience. Two big reasons that really smart, hardworking people that want to make money in the stock market get really frustrated and don't have success. Number two is they trade because their account's open. The market's open and they feel like they have to do something. And that's the wrong sequence. So you're trading because you're bored. You're trading because you want action. You're trading because you want that adrenaline rush. Get the adrenaline rush at the end of the month when the month is over. We got 2 more trading days in September. Finish this month. If you did your job this month, maybe you made a little bit, maybe you lost a little, maybe you had a big month because you were on top of your profit targets and your trade management and understood your trailing stop losses. Bored is the first reason. The second reason, by a mile, like bored is here, up here is the bigger reason. One of the toughest challenges for traders is fighting greed. We come into the stock market and, if I bought 1,000 shares of that stock and it went up $20, I would have made $20,000 in 5 days. But you have to remember, we just talked about trading being a business, and the biggest challenge with trading being a business is you have to run it like one, and greed takes over too quickly and you trade too big. By far, the number one reason that smart, hardworking people struggle in the market is you trade too big too soon. Number one is too big too soon based on the fact that you don't have experience, you don't have skills. You need to learn the process of trading, trade management, profit taking losses, scaling in, scaling out. And number two is you just too greedy. You just want to trade too big too soon just for the sake of you just see the upside, but you don't respect the downside. So we want to get to the point where you're understanding that trading because you're bored is by far something that you need to grasp immediately, which means that, and again, we talked about this yesterday, so I'm actually going to bring this home by talking about something that happened, and we're going to get into sectors in a second. It means we dig deeper into sector rotation, which is we're going to talk about right now, and find the obvious order flow. Such, again, hopefully you've been with us for a while now. We've been talking about energy stocks working their way up the list for a while. So we're going to now translate that into something else, which we'll dive into this in just a second. We'll get into that in 1 minute. But getting back into this, it means we rise above the chaotic headlines and trade like a pro. Now I want to bring you down to something that we mentioned in our coaching call on Monday. So we have our weekly coaching session. And the last thing down here is something that we want to talk about. Finviz, who's on the call with us right now, asked a question about how do you know when you're getting better, even if your P&L doesn't show it. So Min's a new member of our community. He's been in the boot camp for a couple of weeks. I think he's having a good time. He's certainly getting his money's worth. He's actually asking a ton of questions, which is what I want you to do. When you come into the boot camp, I want you to ask as many questions as possible because I want you to have clarity. But getting to this question that was asked, and I think it's a really good one, and I'm talking to you now, I'm talking to everybody on this call right now, is you have to get to the point where the market conditions as they unfold and you're reading the stock market, eventually you're going to have to get to a point where you say, I love this scenario, and that means I'm okay with accepting risk. But the other side of the equation is, I just looked at the market from so many different angles and I can't find anything I love. When you get to that second part, which is how we answered Min's question in the coaching call the other day, when you get to the second part, when you're looking at the market and you're saying, okay, I'm past, I don't trade bored anymore. Now I need to find great opportunities. And then you take and you elevate your game even higher where you say, I just looked at everything from multiple different angles and it was really, really hard to find a great idea today. That's when you know you're progressing and you're taking trading seriously. Now, again, it's 7:48 in the morning. We're all taking it seriously, right? But taking it seriously and wanting it really bad is different than taking the right action. I talk about that with myself all the time. I really want to lose 20 pounds, but I also really like to eat. So I don't necessarily take all the steps where I can drop 20 pounds in a heartbeat. But when it comes to my money and it comes to trading, I am flawless in my execution because I know the path to get there is don't trade bored, know your strategy, and only trade when your strategy is there. So I'm challenging you now, everybody on this call, or if you happen to be watching the replay, how many times, let's say in the last month, let's not even go back further than, let's say how many times in September did you look at the market and say, wow, this is really tough price action. I might be better off in cash right now. If you didn't say that once, then we have some work to do. That means that we have to really drill in what it means to you, what an A+ trade is. So remember, everything starts out with A+, and anything away from A+ immediately has to adjust your expectations for follow-through. It immediately has to adjust your expectations for position sizing. All right. So what we're talking about today is how to think, act, and trade like a professional. And all of that translates into what we're going to talk about over here, which is sector rotation. So we drive into sector rotation, and we've been talking about energy stocks for a while. But what else are we noticing now? Basic materials were in the doghouse. They're working their way up. Industrial stocks are starting to work their way up. So again, what does that mean for us? Everything we talk about on these calls, we want to, how does that translate into me making money when I buy stocks? It translates into now you need to start moving your price action game plan, your price action research. You go, again, we call it a treasure hunt. When you go on a treasure hunt every day and you start looking for ideas, this has to be where you start. Why? Because this list is literally being formed by smart money starting to take action, either in the context of bullish order flow, which if you don't know what order flow means, it's the smart money buying. They're sending orders into the market and they are literally paying higher prices now because of where they think stocks are going to be in the future. There's no other reason to look at a chart and say, why was today higher highs and higher lows? Why was this week higher highs and higher lows from last week? It's because somebody with deep pockets thinks this stock is going up in the near future. Those are the reasons we pay attention to sector rotation every day. So we've been focused on energy stocks, and hopefully, again, if you're a regular viewer of this channel, Stock Trading Pro, and again, please click subscribe if you're not, and hit that thumbs up button. I'd really appreciate that too. That lets us know that you like this type of content. Now we're starting to focus on financial stocks. We're starting to focus on industrial stocks, and we're noticing basic material stocks are starting to come into the fruition. So what would that imply about what's happening in Washington right now, about the lockdown and the infrastructure bill and all that kind of stuff? They're working their way higher before all of that stuff gets officially passed. You think that's coincidence? No, but this is what separates you from somebody who wants it really bad, but watches 6 hours of the Big Bang Theory instead of doing this kind of research. I'm telling you, if you're going to be a part of my community, which I hope you are, we have to elevate ourselves a little bit more, devote a little bit more time, and take purposeful action to look at this kind of stuff, because we're noticing what's starting to elevate to the top. Okay. So we're going to work our way now into sector rotation. Okay. We're going to work our way into sector rotation, and we're going to specifically look at industrials and basic materials and see if there's opportunity, see how long smart money's been bidding and offering for these stocks. Is there bullish order flow? Is there bearish order flow? Is it in a change of trend? How long has that order flow been unfolding? And that dictates our position sizing. All right. So we're going to head on over. We're going to show two different ways to do that. Let's see. Andre keeps asking about AMC, Net, and Ford. We actually talked about Ford yesterday. We spent a lot of time talking about Ford yesterday. Let's actually pull those up and we'll dive into those stocks. So Ford, we mentioned yesterday. Ford actually had some good news. We had this break of the downtrend. And it's what's kind of interesting about Ford, we did all of this price action, and you can see that we worked our way through the charts. Ford actually broke the trend for us and started heading to the upside, and then the news story came out. So kind of interesting when you start to watch that, right? So AMC is actually a little bit different story. AMC actually broke lows yesterday, and across multiple time frames, AMC is in a really awkward situation. And right over here is actually what I want to point out in AMC. This breakdown right over here. The last time AMC had a big monthly breakdown, it broke down and within a couple of days found a bid again and rallied for the next couple of days. So now you have to really work short sale orders in the context of the bigger picture. So AMC right now, as of this moment, is in bearish order flow. Now, I want to put that into the bigger context of what it means to place trades in these stocks. We had quite a few, actually today's list of stocks that meet short sale criteria. Let me actually pull up that list. Actually, you know what? I'm going to post this in here if you want. You can take a look at them. And the reason I'm doing this now is I want to make a point, okay? Because the stock is in my long list or because the stock is in my short sale list, that doesn't mean I just go right into the day and start trading it. It still then needs to confirm today's price action with the context of the longer term order flow. I actually think AMC at this particular moment is breaking down, and it broke down big support yesterday. So going into the day, I'm looking to day trade it as a short sale. If AMC catches a bid with the rest of the market, gets back above certain levels that we're looking at, then I'm going to leave it alone. It's that simple. Right now, it meets bearish order flow. in the short term. I'm looking to day trade it on the short side if it's available to short sell. And if it opens higher and pushes higher, I just leave it alone. That's real trading. And again, we talked about a couple of days ago going from trading scan to trading game plan. Two different things. But then after the market opens, then you have to decide if it's a trading opportunity. Net is a little bit different. Net is actually one that we have been trading for a while and just got absolutely clobbered today. So what I was looking for in my game plan coming into the day in net today, and you can actually see, I'll give you like a little sneak peek. If you go down to the bottom of the list, I actually have net as a snapback trade today. Now, I don't want to get into what a snapback trade means today, but I was expecting net to find buyers at yesterday's low yesterday and then actually rally up and test yesterday's high. But here's the cool thing about that whole scenario. You can actually see right now in the bottom corner over here, net is actually opening higher today. So we're getting the pre-market price action that I was expecting today on the open. And if you happen to watch the game plan video in our community that I did last night, I literally went into the game plan last night saying I'm expecting the market to rally this morning, and then we'll see as the market unfolds, do we hold that bid? So because the conditions have changed in net, where now it actually opened, it's setting to open higher, I'm actually looking to buy after the market opens, let the dust settle, and then get involved. So what I planned for net pre-market has already played itself out. So now I have to go deeper into that list that I just showed you for other opportunities. But I want to segue over now into sector rotation. So there's a couple of different ways of doing that. One way of doing it is using TradingView, which is a software that we keep showing every day. Very, very important. So you can break it down this way, but I actually think that the easier way to do it is to go into Finviz. Finviz is one that I use every day. It's one that I walk everybody through in our boot camp. But we want to start out with a basic scanner because remember, what we're talking about right now is we're looking to dive into, are there any opportunities in industrials and basic material stocks that are working their way back up to the high? What is this? No offense, Pete, but isn't it more important for us to see the chart rather than your hand signals? Well, John, you know what? You have a choice not to watch the videos. I'm not asking you to be here. If you think that I'm doing something that doesn't match what you want, leave. You don't have to be here. All right. So we're going to work our way over into Finviz, and let's actually make this a little bit bigger so it's easier to see. And we're going to start out with what we talk about every day with our main criteria, which we call our template. And if you're familiar with what we do, we start out with average of over $15. I don't trade penny stocks, just to make that clear. Go over average true range, which is a minimum of $1.50. We've explained that recently on, that's the volatility, the average from the low to the high over the last 14 days, and average 2 million. So that's the basic template. So now we want to break that down a little bit further into industrial stocks. So we break the industrial stocks that meet that criteria. Out of all of the stocks on Wall Street, it comes down to 19 stocks. Now, that's not enough for us right now. What we actually want to do right now is now we want to break it down to what opportunities are in the industrial stocks, okay? So what we want to talk about now is we want to say minimum, which stocks are at least above the 50-period moving average, right? That's the kind of quote unquote the line in the sand. And right now, 2 stocks meet that criteria. So anything that's a little bit deeper through the 50-period moving average, those are probably not ideas that we want to take a look at. So out of the industrial stocks, they're starting to work their way higher. These 2 stocks meet that criteria right now. So now we dive a little bit deeper into those stocks and say which of these stocks have opportunity right now. Now, Boeing actually has had some news lately. If we go over to Boeing and info, we have to see which ones have had order flow and which ones have had reliable order flow. So if we take out yesterday, I think it would be pretty easy to say that info has actually been pretty strong. So out of the 2 stocks right now that are at least above the 50-period moving average, info would probably be the top one. Now, pulled down and broke. This is a question that we get all the time, okay? We get this question all the time. Why are we buying this stock if it happens to be going down today? We're not buying it bottom fishing because of today. We're buying it because of the 6 weeks of order flow prior to this. The stock has been in a really strong bullish order flow since the beginning of May. So it's not this day that we're focusing on. We're focusing on this. This is the order flow. This is the tape reading part of it. So if I had to look at Boeing and or info in the industrial space, I'd be looking at Boeing right now. Now we want to take that a little bit further. And if we remove the 50-period moving average, and we just take a look at all of them that meet that criteria, we want to take a look and see which ones have the possibility of reversing. And right now, FedEx is not there. So General Electric would meet that criteria. So now we put GE into our tracking journal. We put GE into our breakout level. And we come into the day and we'd be looking at a spot to buy GE. So we'd have an alert set for GE. So we're working our way into the industrial stocks. And right now, Info and GE in that sector that has started to work its way higher is where we're looking that meet that criteria. Now, if you want to go a little bit lower position size, where maybe you're looking at expanding that list and maybe you go to 1 million shares, you can see that brought it up to 43 stocks. So if we go back out to performance and we work that list a little bit more and we go back to the 50-period moving average, crossed above the 50, you can see that expanded it to 14 stocks, which is a big difference. And then if we sort that by stocks that are strong this week, again, we keep working it down. You might want to watch the video more than one time. So now we go down to the week and we start to look at those charts again. So what we are doing right now is we're focusing on the strongest stocks in sectors that are rising over different time frames. So now because we dropped the volume requirement just a little bit, which is okay, especially if you're swing trading. Again, the big thing with increasing or decreasing the volume means you need to understand that liquidity is less. So that means you need to work the order a little bit. So CAR meets the criteria. SPR has now gone up and near a breakout level. UAL actually now has pushed and paused. So we started to open it up a little bit. So now we're getting into a little bit more recovery stocks like David Farris talks quite a bit about in our community. You could be looking at UAL. You could be looking at ALK. So airline stocks are starting to catch a little bit of a bid. So you start to work that list a little bit. WAB actually now near a breakout level. PWR sitting at a breakout level. So you start to work the list a little bit. Now we do the same thing with basic material stocks. And we work that. And there's only 6 that meet the criteria that are above the 50 and average 1 million shares per day. CF has actually been near the top of our list, and it's actually pausing above the breakout level. Alcoa has been very strong. OLN near a breakout level. LAC, we took a trade on last week that didn't follow through, and NTR meets the criteria. One of the other stocks that we've been trading quite a bit in 2021, NUE has not caught a bid yet, but that's definitely on the radar. So the point that I want to make here, which I think is very important, and a big feedback that we're getting both in the community as well as in the comments, which is, what do I do if the market goes down? Well, you have to remember that different types of companies, different industries are going to trade differently in different market cycles. So what ends up happening now is stocks that were super strong during the pandemic and the market going up. We had stocks like Wayfair and Etsy and all of that kind of stuff. They're kind of going to take a back seat, and these stocks that are going to benefit from the recovery, which we talked about LYV, Live Nation, recently as well. It's our job to focus on what is actually in play right now. And that's easiest way to do that is start out with sector rotation, track it every day like I do for our community, and then find the stocks that are bullish. We probably just rattled off a dozen stocks that you could be looking at right now that are the strongest stocks performing well in the industry, the 2 industries that are making their way up the charts. So hopefully today we spent a couple of different things talking about dealing with adversity, how professional traders react when the market conditions change. And now we took that a step further and going deeper into some specific trading ideas in the strongest stocks in the sectors that are working their way up. And the reason we spent a lot of time on this is because we spent a lot of time going over saying the energy sector is getting interesting in July. The energy sector is going sideways now. It stopped going down in August. The energy sector is starting to break out, but we were aware of that because we track it every day. And this is a part of what we do every single day. It's literally the first thing that I give our community right after the market closes at the end of the day. So hopefully I inspired you, number one, to really, if you want to take a screenshot of that, you can take a screenshot of that. So what I want to do is I basically want to inspire you, number one, to be tough when you have a little bit of adversity. And number 2, take purposeful action in the structure that we just talked about. Okay. So I have to head over and get ready into our previous meetings. And that's where we're going to take it from here today. Look, John Lash, I'm a pretty mellow guy. If you don't want to be here, don't be here. I'm not asking you to be here. I'm sorry. I work hard, and there's a lot of people that really want to learn every day. If this isn't for you, go somewhere else. I'm sorry. I work too hard if I have somebody yelling at me on social media. Go somewhere else. All right. All right, everybody. Hope you have an awesome day. Please watch this video again because we covered a lot of stuff, especially on the back end with the with the stuff about sector rotation, and then diving a little bit deeper, and then working the different parameters, both from 50 period moving average, 20 period moving average, the volume, if it's up for the week, and you start to really hit it from a bunch of different angles. Okay. The software was Finviz. Let me actually pop that into the chat for you, and you could actually take a look. I think this is going to be the one that's set for basic materials. All right. Have an awesome day, everybody. I will speak to you soon. Take care now, everybody. Thank you very much. I really appreciate it. I'm very grateful.